Here are the top 2 Canadian dividend stocks to buy in 2023. For this video, I wanted to focus on stocks that have been beaten down recently and are trading near their 10-year lows, which I'll show a little later on. In my previous video, I highlighted the downsides of dividend investing. Please check out that video if you're new to investing or new to dividend investing specifically. You should only invest in these 2 stocks that I'm recommending once you watch that video and understand and know the risks. Before I get started, if you're a beginner or new to Canadian finance, I've created a course for you called Canadian Finance Pro. It's over 8 hours long, over 60 videos where I discuss budgeting, credit, inflation, managing debt, tax, where to invest, and how to invest for beginners. It's stuff that I haven't included in my channel. This video is just a snippet of what I included in the course, and I've introduced a new bonus. With every purchase, I'll do a one-on-one chat for an hour with every new member. If you're a longtime viewer of this channel, the first pick will annoy you. I've recommended it twice before, but it's still one of my favorite dividend-paying stocks. It's Enbridge, ticker ENB.TO on the Toronto Stock Exchange, or ENB on the New York Stock Exchange if you have US dollars that you want to invest with. Enbridge is currently trading at $43.63 per share, and they've taken a beating this year. The stock is down 18%. But not just that, if you look at the price 10 years ago, January 2013, it was trading at $43. No movement. If you've held the stock for the last 10 years, you would have 0 stock appreciation, 0 price movement, but there is some upside. The reason I'm recommending this is the dividend stock, so I rarely tell people to chase the yield. High yield doesn't mean good investment. There's usually some risk involved, which if you watch a previous video, you'll understand there are risks to dividend investing. The current yield is a little above 8% per year. They pay quarterly, so it's 2% per quarter, 8% per year. You can get this information straight from their website. They've been paying dividends for 68 years straight. Never missed a payment. That's the part I'm recommending. There's good history of dividend payments, and on top of that, the dividend increase streak. Another image straight from their website. Take a look at the last 28 years of dividends put onto a chart. They've had an average increase of 10% per year over the last 28 years. Your yield might be 8% now, but it could be 8.25 next year, then 8.5, then 9%. This is a long-term hold. I don't expect the growth to continue to be 10% per year. The most recent was 3%, which is still good. Next on the list, hasn't been featured as many times on this channel, is Bell Canada, ticker symbol BCE on the Toronto Stock Exchange, currently trading at $50.68. They are down 15% this year, which is painful, but to make matters worse, if you look at the price from October 31st, 2014, 9 years ago, if you bought the stock 9 years ago, you would have no price appreciation. It would be the same price. Like the previous stock, there is some upside. You're here for the dividends, currently paying 7.64%. If you invest $1,000 in Bell, you'd get $76.4 per year. If you invested $10,000, you'd get $764 a year. Remember, this is paid quarterly, so you'd get $191 per quarter. Bell has been paying dividends since 1880, so 140 years, but that doesn't matter. We only care about the last 20 or 30 years to really judge a stock. Bell has been increasing their dividends for the last 15 years. The average for the last 15 years is only 2.7%. Not that impressive, I get it, but the last 5 years have been 10.5%. So if that continues, this makes the stock a little more enticing for your dividend portfolio. That's it for this video. Nice and short. I notice viewers don't like the long, drawn-out reviews when I do a financial statement, so I'm trying to keep it basic. Let me know what topics you'd like covered in the future. I'm going to make a few more tax videos, like another intro to Canadian tax. Those are much longer since they're more complicated. Thanks for watching. Subscribe to the channel and tune into the next one.